Hi, my name is Gabriel Gonzalez. I'm a mining analyst at Echelon Capital Markets, part of Echelon Wealth Partners, a Toronto-based boutique investment bank and investment dealer. I'm pleased to have Hugh Agro, President and CEO of Revival Gold, a TSX venture-listed gold developer, joining us for Echelon Wealth Partners question and answer updates with noteworthy mining companies. Thanks for being with us here today, Hugh.
Thank you, Gabriel. Great to be with you.
For those out there who aren't familiar with Revival Gold, can you tell us what you were looking for as you were putting the Bear Track and Arna Creek projects together?
Well, in a word, growth. We've got a brownfields project in the United States, which of course is geopolitically a great place to be mining, and in the state of Idaho. But what we were really looking for was growth, and we sure found it.
So you've certainly had a lot of growth with the drilling and the exploration that you've done, and Revival is now working on a preliminary economic assessment. Can you talk about what the existing infrastructure at Bear Track means for the potential project economics?
There are a couple of things that stand out with that infrastructure. Number one, obviously, we've got an ADR facility, an existing facility which we can refurbish and redeploy. But we've also got power to the site, active power to the site. We've got roads. We're about an hour's drive from a town of 2,000 people, so we've got a pool of labor and a community that's supportive of exploration and mining. Those things are all to our advantage. Furthermore, we've got permits. We've got a leach cyanidation permit, and we're working on the back of an existing permitting regime. We'll have to update that permitting for a restart of operations, but those things are all going to save us money, time, and effort.
Can you talk a little bit about the replacement cost of the plant? How much money would you have to spend if you were building the plant versus just refurbishing it?
Yeah, difficult to put a firm number on that right now. I'd point to some of our peers who have done a similar sort of thing. And generally, these ADR facilities can cost, 10, 20, $30 million once you start thinking about power and the transformers and road structures and all of these things. So there's a significant savings that comes with the brownfield site with existing infrastructure.
And Revival was one of the first companies out of the Idaho Renaissance Gate, so to speak. Can you describe the advantages you've seen working in Idaho?
Yeah, I first, have to call out Midas Gold and their leadership for doing such a great job in paving the way for the next generation of explorer developers in Idaho. We've got great rapport with the state government and with our community in Salmon, Idaho. And so I would say it's been that welcoming feel that's been most gratifying for us being in the state. The landscape already set for us, the type of quality of work and good workmanship that we like to see, and the standards around exploration and mining that we think are key. So all of those things make for a welcoming environment and the kind of environment we feel comfortable with. But I would say, the benefit of being first or one of the first is that we were able to pick over all of the different projects and decide that this was indeed the one that made a lot of sense for our investors. Others will follow, and we wish them success. It'll only continue to put Idaho on the radar screen of investors and the bigger corporates. So we welcome the followers that are on their way now.
How did COVID-19 affect your project development plans? Do you see Revival further modifying its plans going forward as a result of the pandemic?
Yeah, first a recognition that COVID, has had a dramatic impact on our lives. All of us, here we are working from home and without the aid of air travel. But I'll tell you what, if you're a gold producer, developer, explorer, this has been a huge silver lining because, of course, the gold price is up. We're up this week, we're up this year about 14%. And not only that, but there's a real recognition that growth projects in good locations are rare. And Revival Gold, the Bear Track Arnett Gold Project is one of these. So it's COVID has put a spotlight on projects like ours, and that's been to our benefit. And we'll continue to progress the project, and we'll do so in a responsible manner for our community and for our staff. We'll work around COVID, but there are some silver linings.
The company recently put out a press release regarding some cost-saving measures in respect of the option agreements that it had with the project vendors. Could you talk a little bit about what you're going to be saving in terms of money? Also, warrants that you might have coming in, and what that means for your financing requirements in the short term.
Yeah. Well, we as a response to the COVID pandemic, we immediately took a look at our budgets, pared back where we could. We restructured, as you point out, our agreements with the underlying property holders, stretching out payments, and in some cases, reducing the amount of impact we have in the near term, the next 12 to 18 months. So really what we've done is created for ourselves a lot more flexibility around the agreements that we have. As you point out, we've had warrants come in to the company just this past week, another $500,000 of 90-cent warrants in very strong hands. And this just gives us the strength to continue to carry on with the programs without having to dilute our shareholders in the current pandemic environment, where investors are somewhat unsure day to day where things are going. With Revival Gold, there's great value. The stock is in good shape and in good hands, and we're funded to get back in the field beginning of July.
Revival has outlined its initial 3 million target ounces in combined Bear Track and Arnett Creek resources. Do you continue to see resource upside potential at the project?
We certainly do, Gabriel. It's a great question. When we first came out with a resource in 2018, it was 2 million ounces. We continued drilling about a kilometer south of the footprint of the existing resource. Our updated resource, as you know, was a 50% increase to 3 million ounces, which we released in February. Our current plans are to take the drilling 2.5 and more kilometers south, again, still from the existing expanded footprint of the resource. So lots of expansion potential along strike at Bear Track. And of course, we're open. We're open to the north and the south on strike, and then down dip at the Arnett deposit, satellite deposit. So we've got a lot of target areas within about a 12,000 acre property position, and really we've just scratched the surface.
With some operators pausing in exploration work because of COVID, when do you see the company getting back to drilling?
Good question. In Idaho, the state government has carved out exploration and mining from as an essential industry. So that means we are not restricted in what we do on site. Obviously, and as I said earlier, we want to make sure we're looking after the community, our staff, and how we operate. But we're not restricted from being on site and doing our work and traveling around. In fact, we've had the engineers out on a couple of occasions with respect to the PEA work. And we, as I mentioned earlier, we'll have the geologist back on site at the beginning of July as we get started with our field programs and underway. Drilling, we'll see. It depends on how things progress over the next couple of months. We want to take care with how we spend our money, and so the drilling can wait for now. We're permitted to drill. We've got a number of areas that we want to follow up, and we'll do some ground truthing with the team on site starting in July. We've got some geophysics plan. We've got some mapping and sampling and field work that's got to take place as a first step, and then we'll go from there.
And is that mainly going to be at Bear Track along strike of the Panther Creek Fault structure, or do you see as well a mix of work happening at Arnott Creek as well?
Yeah, both. Both sites are important to our story. You remember we're developing on two phases. The first phase is a restart of the heap leach operation, and the second phase is the longer term mill operation. So we want to continue to progress those aspects simultaneously. And so the key to the heap leach restart will be the PEA, which is underway. We want to grow the resource in the oxide leachable category, so that's at Arnett, where we'll do some work there this year. And then at Bear Track, we want to continue to expand that strike potential that we see. We've got about over 5 kilometers of strike, already known mineralized strike in the system, and another 6 kilometers to test. And as I said earlier, we'll step out to the Rabbit area next. That's about 2.5 kilometers south of the existing footprint of the mineral resource. Lots of potential to expand on the mill scenario.
As someone who has worked at large cap gold producers and has seen the industry from the inside and out, what do you see as being the main industry driver over the coming years?
Good question. I mean, obviously the gold price, which looks very favorable. I'm never one to hang my hat on the gold price. I think what we can do is continue to advance these projects. So I would say, the second thing is that the big producers are going to be wanting to find districts. And what's interesting about Revival Gold is we haven't had a big producer or even an intermediate producer put their footprint on us yet. We've been careful about how we bring those parties onto site and how we will involve them in our business. But there are, I'm going to say, 12 to 16 million ounces of gold resources in the state of Idaho now, developable gold resources across a number of projects. And that makes it a pretty interesting place for the big guys. And I would expect that some of these seniors and intermediates who are looking for safer geographies, regions where their people can move to more easily, will start looking a lot more closely at Idaho in the months and years to come. And so I think this is something that we can look to, is big companies establishing a beachhead in Idaho, because there's so much gold there, there's so much potential, and that's the underpinning for these companies' ultimate survival, right? Resources, developable resources in good locations.
You've talked in the past about there just not being enough drilling and exploration work being done over the past 5 or 6 years. Do you see that as being really one of the main catalysts behind the need from large cap gold producers to come in and start buying up what they haven't been drilling and exploring for?
Yeah, no, we're in the more risky part of the business. Our job is to put these projects together, move the permitting along, the engineering, the economics, but ultimately the industry is going to consolidate in some sense here. It's just a must-have. When you have the senior gold producers continuously digging themselves into a hole, they have to replace those ounces. And so our job is to put those projects together, advance them. We've got in our back pocket this prospect of putting the leach operation back into operation, relatively modest capital and scale to that operation. And we've got members of the former operating team from Bear Track on our team, including the general manager. So we have the skills, we have a project that's of a scale we can progress. But ultimately, the mill scenario that we're talking about, at 20,000 tons a day, which is what RPA is evaluated for our resource purposes, and the current recoveries, which are estimated by RPA at about 94%, we'd be producing something like 300,000 ounces a year of gold. And that's a big operation. It's a big capital cost. It's It's a scale of operation that will put it in the top 6 of current North American gold producers. And that's the sort of thing that I think the big companies are looking for, the big institutional investors want to get behind. And so I think the industry will come to folks like us who can continue to progress projects in a responsible manner with the support of local communities and with good engineering and science behind them.
Revival Gold has had a great run in its share price over the last 4 to 5 months. What do you see continuing to drive returns over the next 6 to 12 months?
Yeah, we have had a good run in our share price. It's true. We're trading currently at about $13 US per ounce of gold in the ground. I think Echelon's peers are closer to $50 an ounce or pure set. So we've got lots of upside in the stock, despite the fact that we've moved quite well over the last 6 months to 12 months. But the other things that are going on are, of course, and as I mentioned earlier, we're one company of a number that does not have any kind of large senior gold company or intermediate gold company interests. We're a free agent, and I think that could change down the road. We've got a PEA underway, which will take us towards a project that has economics and which has a pathway to production in the relative short term. And as we talked, there's lots of exploration upside at Bear Track Arnett. We've got 3 million ounces. We think there's potential for better than 5 in the system, and that's I think going to be a big catalyst for the company as well. So lots of reasons to invest in Revival Gold today.
Great. Well, I'm really looking forward to seeing the next leg of growth from the company. Thank you very much for taking the time to be with us today, Hugh.
Thank you, Gabriel.